So the most challenging trading pair for me actually is or asset for me are stocks.
Oh,
Yeah, and
yeah.
that's where I started trading the stock market. And it was challenging because you have to know not just about the macroeconomic factors. You have to know about the company. You have to
Mm.
know what their plans are. Then the human resource. Who's in charge? What are they doing? Are they gonna screw up or are they gonna do well? You don't know. When I first started trading stocks, I actually made a lot and lost a lot more. So that was my experience. Although I find crypto volatile, at least I find that maybe there's no insider trading the way there would be in the stock market. Forex, I tried. It's nice and stable, which is great when you use leverage. So there. So that's for me. How about you guys? Tito.
Yeah, most challenging pair that I encountered are the altcoins. You know why? Because when you trade altcoin, you have to take a look at Bitcoin as well. You have to know the direction of Bitcoin because even if your altcoin, your favorite altcoin is going up, and then all of a sudden Bitcoin goes down, that particular altcoin goes to the floor. Right? And how do I manage risk? I have three risk structure on my trading strategy. First is by cutting losses. This is the normal risk management tool that most of the traders are using. They put stop loss or they cut loss whenever the trade goes against them or at least hit a certain level of their risk tolerance. So I use that. Second is I do layering. If I don't use stop losses, I layer. What do I mean by layering? It's dividing my position size into three or five instead of just buying at one price. I layer it in that way. I won't cut loss my first entry, but I'll add up another layer when it goes down and add up another layer when it goes down, as long as the trading pattern or the trading plan is still intact.
So you're cost averaging.
Yes, yes.
Buying in tranches.
Buying in tranches,
Oh.
right? And the third one, the last one, which is not typically used and it's also not that easy to use, is hedging.
Mm.
Mm.
So, yeah, hedging is opening a position, countering an open position. For example, you have a long position and then the market suddenly goes down, you go short to protect your downside. So, when do I use hedging? I use it in high volatility situations. For example, as what Coach Miranda said, when there are news, there's a high volatility. So when I counter that, I use hedging. So I
Mhm.
use three risk structure, not just one.
Yeah.
Okay.
I kind of agree on the alternative coin, concept. Obviously, cryptocurrency in itself is it's a diverse, world, so to speak. So I kind of subscribe to that. And to your point, I would like to say that one of my most challenging trading, while I like crypto as, something that I'd like to trade for the rest of my life, it's also the same thing that I find a bit challenging in a sense that if you further double click on cryptocurrency, you'll get to see those types of meme coins. And what's
Mm.
challenging about them, obviously, is there's no fundamentals for these types of coins.
Right.
It's basically more of an extremely speculative level of trading. And what's interesting about it is that in stock market we talked about the fund flow paradigm. So people buy first the macros, then we go to the second and the third
Mm.
liners. When your macros are overbought, then you go to the second and the third one. In crypto, we used to see that. However, in the most recent events, it has become very speculative that people don't, it doesn't matter anymore. So people will
Yeah.
just trade, meme coins and then, the Bitcoin, etc. So the one of the most challenging one for me is obviously going to be the meme coins. And, I like what you said, Tito, about, layering, obviously position sizing and cutting losses. It's interesting because a lot of traders nowadays, especially on a speculative world where the price of each asset is very, cheap, so to speak, then people will just obviously just put a lot of their portion or position and just get wiped out.
Yeah.
So I think it's a
Yes.
very important reminder that from a trader perspective, the more that we wanted to trade speculative assets, the more we need to be driving the education, right? To be, having that level of balance, risks, etc., and obviously your risk management. I think it's something we need to kind of do the conversation on education standpoint.
But coach, just to add to that, don't you think it's also not just risk management, but emotional management?
Mm,
Because I guess when you want to get into the altcoins, that means that you have a certain level of greed, right? The greed
it's true.
index is very high here, right?
Mm-hmm, mm-hmm.
And then therefore, you have to also manage that aspect where, because of that volatility, to make sure that you're able to do a proper stop loss when you need
Right,
to.
right. Exactly, right. And obviously, they say the more risks that you do give, the more reward that you could potentially have.
Right.
So definitely, but then again, one would surmise that obviously, we need to still protect our capital. Without your
Yes.
capital, you're not going to be staying in this market, for a longer time. So obviously, to your point, the more that we expose risks, the more that we need to be more
Mm.
mindful of our capital. How about you, Kuyang Jerome?
Yeah, I have to agree to what you've just said, no? And being emotional with the market, it's just normal because trading is an emotional game, no? So it's a collection of all our emotions.
Mm-hmm.
So each
Yes.
one of us affects the market. So how you feel, how you feel, how you feel, how
Right.
I feel really affects how the markets move. No?
Good
So
point.
it's a collective psychology of each one of us. But the thing is, we have like the risk management, we also have to manage our psychological emotions. So it really depends on how much you're risking, really, because each one of us also have different psychological wallets. So that
Right.
means I'm used to risking $500 and you're used to risking 10,000. So
20,000.
yeah, 20,000. Sorry.
I'm kidding.
So if I go to your level and I'm pretty much profitable at my $500
Right.
level, and I go to your level at $20,000,
That makes sense.
I would I would be shaking,
Yeah.
and I would
Mm-hmm.
be just shaken out of the market with just maybe 1% move.
Right.
Good
Yeah,
point.
yeah, yeah. So it's really important to understand your risk tolerance level,
Mm.
because every trader should have a different set of risk tolerance. So when you start trading, yes, maybe there's this guy or this a trader that you want to copy his style, but you have to understand also before copying his style, can what is his lifestyle.
Right.
Mm-hmm.
Maybe that trader can monitor the market 24/7, but
Right.
if you can't monitor the market 24/7, maybe you will not be profitable when you adopt his strategy.
And that person might have a different risk tolerance.
Hmm.
That person might have a different time value of money definition, or value of how much more are you willing to wait for your money or your asset to appreciate. I mean, to your point, maybe you're waiting for a month or a week, or someone might be an active trader,
Right.
someone might be a passive trader. So it's important that it's non-negotiable, I would say, to take a look into those types of profiles, and don't compare. You raise a very good point. All of us have our own different psychology,
Hmm.
and comparing my wallet to your wallet might not be apples to apples.
Yes.
We need to take a look into that.